Welcome to our Blue Margin Expert Insight series. We're glad that you're here today. This series was established for the benefit of mid-market executives and private equity firms who are looking to better understand how to use data intelligence to put growth plans into action and create higher returns on investments. I'm Greg Brown, BI consultant with Blue Margin, and today on our show we host Vishy Venugopalan, managing partner of Weave Growth Partners. This PE firm, founded in 2019, intentionally blurs the lines between venture capital and private equity. Prior to Weave Growth Partners, Vishy served at Citi Ventures as Senior Vice President of Global Venture Investing, founded a Silicon Valley chatbot customer service platform, and had IT and finance stints at Silicon Valley venture firms, as well as working in IT for Morgan Stanley. He has a master's in computer science engineering from MIT, as well as an MBA from Wharton. Vishy brings the Silicon Valley playbook of data, analytics, and AI to lower mid-market deals, combining the best of startups, technology, and investing. And that's exactly how he and his partners would have it. Vishy, welcome. Glad to have you join us on the show here today.
Thank you, Greg. Very happy to be here.
Yeah, and to start us off, Vishy, can you share a bit about your background in Silicon Valley and starting Weave Growth Partners?
Absolutely. First of all, thank you very much for having me. I'm very excited to be here, and I'm a big fan of the work Blue Margin's doing in helping companies be more data-driven. So in terms of my background, I have a background in basically computer science and business. I attended MIT for my college education. When I was there, I majored in computer science and cognitive science because of my interest in artificial intelligence. I didn't end up doing advanced research in AI. I rather applied it to industry, I suppose. But basically, once after I graduated, I basically started my career off in technology, but in financial services and not in Silicon Valley. So, in other words, I've always had a deep roots in technology, but I've also seen it applied in a variety of different contexts, and so I've had a strong sense of its grounding in kind of real world applications, and that's been a theme that's been pretty important to me. Prior to Weave, I've been a venture capital investor for the majority of my career. I worked most recently before Weave at the venture capital investing team at Citibank. I was focused on investing in startups in the data, analytics, machine learning, and AI themes. And, while I was there, led a number of investments in startups that, in one way or another were helping transform large companies like Citi and other Fortune 500 companies. And it was really my privilege to, have a front seat to all of the innovation that was happening in that space. It was really my privilege to see entrepreneurs solving these kinds of problems at the cutting edge of data analytics, and also seeing how their Fortune 500 customers were thinking about the coming wave of data-driven transformation for their own companies, right? So that was kind of one perspective that I had. Simultaneously, because I was part of Citi, we saw that even within Citi, that kind of data analytics and automation was a big theme, was very strategic to all of the different businesses within Citi, ranging from the institutional side to the consumer side. Eventually artificial intelligence in some way, shape, or form was coming to every business within Citi, and it was very much on the radar of all the senior leaders. So, prior to Citi, I had also been an entrepreneur. I had basically started an angel-backed software and AI startup, and it was based on the notion of customer centricity. And it was our customers were largely retail and e-commerce. So, definitely have been in the trenches trying to grow a fledgling business, as quickly as possible. Building a metrics-driven sales and product development team, etc. So. My partners at Weave also have, very similar backgrounds, and complementary to mine between private equity and Silicon Valley. So basically, as a group, we saw, we'd worked with high growth portfolio companies. We had all been entrepreneurs, and we saw the immense opportunity for data and AI to really transform the rest of the economy, not just Silicon Valley startups and Fortune 500 companies, right? So practically speaking, that meant a foray into private equity. But the mindset that we bring to it is very much informed by our experiences in venture capital and entrepreneurship. So kind of as a firm, Weave is private equity in its body, in its venture capital, in its mind, and kind of very much entrepreneurial, in its soul. That's how we like to think about it.
Yeah, absolutely. And I can imagine just your experience and seeing the range of companies in different industries and how they're leveraging data and analytics that provides an excellent background in terms of managing Weave Growth Partners now and looking at different companies to see where those opportunities are with data and where companies could leverage it a little bit more.
Absolutely.
Yeah. Do you see that shifting at all in terms of, just like you said, there's a range of different things to create value in the portfolio, and data and analytics kind of is a certain priority for any given firm. Do you see in general that that's being prioritized a little bit more than other ways to create value, or is that still kind of a change in progress in terms of how firms prioritize the different options in creating value?
Yeah, in terms of kind of taking a little bit of a historical view, right? In previous macroeconomic regimes, there have just been, candidly just lower hanging fruit for value creation. So things like, optimizing your balance sheets or taking advantage of, different financial products for kind of better engineering within the balance sheet. And, so the second reason why maybe data-driven transformation hasn't been necessarily at the top of everybody's list in the private equity world is just that it's been there has been less of an imperative to do that. So let's contrast that to other organizations that we have worked with, such as venture capital backed startup, right? So VC startups, they have limited runway. They have, pretty high return hurdles that they need to hit in order to, really kind of move the needle at the fund level. So their boards and so on set, fairly aggressive growth targets based on limited runway. So they really absolutely have to figure out how to grow very quickly in a short amount of time. There's also the fact that these companies tend to be a lot more digitally native, just because of the types of companies that are backed and the fact that they're created de novo. So they can be digitally native from day one. So it makes it a lot easier to, capture data, set things up the right way in terms of processes and so on, and, run a data-driven business from day one. PE-backed businesses, while they also need to scale, they're not necessarily always digitally native. There's a little bit of kind of organizational transformation that needs to happen. Potentially behavior needs to be changed in the kind of all the way at the rank and file level. And in terms of kind of the imperative to change, right? Their PE businesses, generally speaking, are already cash flowing when the firm invests in them. So as such, they're basically kind of like default alive rather than kind of default dead, right? So venture capital startups will eventually run out of money, and, unless they start figuring out how to make money. And so at some point that's the default that, they'll be default dead. But PE-backed businesses being cash flowing are default alive. And so it's a little bit of a different kind of mindset. So, given the availability of lower hanging fruit in terms of creating value, that's historically where things have gone, where the focus of efforts has been. Now, to your question about is that changing? It's certainly a work in progress. I do think there is a change that is underway. And there's a couple of kind of factors kind of driving it, right? Like one is that first of all, there's a new macroeconomic regime, right? And so with respect to kind of a different interest rate environment and so on, the availability of capital and kind of financial products isn't necessarily as free flowing, and you really sort of need to put in the hard work of operationally transforming the business, right? So In some respects, it's a return to the kind of very operational roots of private equity, when the industry was sort of first created in the 80s and so on, right? So in some respects, it's sort of really coming back full circle. So so that's one aspect. And the other aspect is something I mentioned just a moment ago, which is that there's also a lot more high quality systems and basic reporting available now on a continuous basis, right? So not just ad hoc analyses that are created by some analyst in an Excel spreadsheet, right? So there's specific tools like a CRM and a pipeline report, for example, right? And basically a lot more continuous recording of data at a much more fine-grained level, right? Which basically doesn't need to be done as sort of a point-in-time ad hoc report, right? So there's more systems available now and kind of just better basic reporting available, which gives us a much better view into and a quantifiable view into kind of leading indicators of the business, right? And this also comes along with the fact that there is a general recognition that there is value in tracking not just financial metrics, which PE firms have done very well historically, but also operational metrics. So there's a few different changes that are underway within the private equity industry writ large, and I do think the general direction is that it's a bit more data driven, and people are starting to pay more attention.
Yeah, absolutely. And I agree that the built-in reporting and analytics that a lot of companies and PE firms have now with platforms is a net positive thing. It just makes it easier to access data and to start to have those quantifiable measures, as you mentioned, not only on the finance side, but also on the operational, the sales side of the business as well. So changing gears here a little bit, Vishy, lately it seems like everyone is talking about AI, things like ChatGPT, and what that will do for our society and businesses. I think leaders' ears kind of just perk up hearing those words. And you and I have talked before about how ascending the analytics ladder and leading to advanced applications like AI and machine learning, it first requires companies to sort of situate themselves on the first rungs of that ladder, getting just a clear picture of their data. These first rungs of the ladder, descriptive and diagnostic analytics, kind of lay the groundwork for data-driven decision-making, providing leaders with business intelligence and curated visibility into their data. In your view, what does successfully ascending the analytics ladder look like for most businesses?
Yeah, no, this is a great question. It's certainly something I I've thought about and feel pretty excited about in terms of kind of hopefully where the industry is going. Certainly, the last couple of months have been really there's been some blockbuster moments in terms of the emergence of intelligent assistants and kind of chat-based tools. And this is an area that I even started a company. And so it's certainly a topic that's very close to my heart. But I in terms of kind of this evolution, I want to mention a couple of things. I want to start by drawing an analogy to kind of just basic evolution, right? So I studied cognitive science in college as well, so kind of neuroscience and so on. So I'll maybe draw an analogy from that world, right? So in the very kind of early stages of life, right, single-celled organisms and kind of very basic invertebrates and so on, they don't really have a brain, but they do respond to stimuli, right? So they sort of understand what's going on in their environment, and they kind of react to it, right? So, but the reaction is kind of very short term. There's no real kind of learning going on there, right? So, but as the sort of organisms become a lot more complex, right? It's not just individual neurons, right? They all kind of knit together into the central nervous system, right? And then kind of as we progress within the vertebrates, that the sort of the top of that central nervous system develops into a brain, as well as, kind of a frontal cortex, right? And throughout this time, there is not just, there's a general kind of evolution in terms of kind of responding to stimuli, kind of at the very basic level. But then there's also things like, learning, there's memory, and there's a much better awareness of kind of where the organism is situated and what it needs to do, planning, these types of things, right? So those types of functions are just kind of higher cognitive functions that, you find only in kind of big brained apes like us, right? Compared to sort of, invertebrates and kind of smaller animals, which were, much older in the evolutionary tree. So in some respects, I'm just sort of drawing a parallel to that. The kind of descriptive and prescriptive analytics are kind of the very earliest glimmers of, an organization understanding where it is or operationally, right? What is actually going on, right? But then sort of once you ascend that ladder, ascend that curve, you're at this, in this space where you can really kind of, be a lot more proactive. You can plan ahead. That's kind of in the middle, but sort of, as things become more self-driving, right? There's, the opportunity to, automate and execute, a lot of these actions, proactively. So, another analogy, of course, is a much more, accessible analogy or much more recent analogy in human history, which is the self-driving car, right? So, there's kind of level 0 self-driving, kind of level 5, which, we aren't, close to yet, but maybe we'll get there soon. There, the main kind of ingredient I would highlight in addition to data and analytics is automation, right? So, there has been, an ongoing kind of, APIification, if you will, of different businesses, right? So there's, business processes have been kind of broken up. They've been like atomized into kind of smaller units that are then sort of composed together in different models of interaction. And, once you have that, right? So, you have to start kind of at a relatively kind of manageable and small level, and then sort of automate different parts of that, right? So basically, if you set up automation correctly, right, it can really kind of help orchestrate the core business processes within your organization, and that sort of really starts by taking understanding at a very fine-grained level what those core business processes in your business really are. In terms of kind of painting a picture in terms of what this might look like, right? So right now, looking at the world of things like robotic process automation and so on, where there's different kind of starting from the level of a large business process, it's kind of zooming down into certain sub parts of it, right? Those parts can be automated, right? So, for example, if there's insurance, claim processing, for example, right? That's the kind of overall business process, but some sub part of it, such as taking a picture from an accident report, or like reading the contents of a scanned PDF or what have you, right? Those are the types of subtasks within that process which can be automated, right? And it's not that, automation necessarily means that, some kind of robot or some algorithm takes over the process from start to finish, right? It's really all about sort of, thinking about, the overall process, which of these, to what degree, can they be automated, and kind of which, actor, human or algorithmic, sort of comes first. That's what determines kind of this curve of kind of automation, right? So in terms of kind of where we are right now, we are looking at a situation where there are certain subtasks of a large business process that are automated, but really with technologies robotic process automation being where they are today, right? Those processes are still fairly brittle, and they need a human in the loop to kind of basically recover from errors, make sure that different parts are kind of talking to each other correctly and kind of orchestrating that whole process. That's kind of roughly where we are. But when we start to get to a space where more subtasks or even sort of entire sub processes are starting to be done, on their own in a kind of straight through way, and human beings just come in or get called in for exceptions, right? That's kind of probably the next level of self-drivingness in the enterprise. Some processes like for example cybersecurity monitoring are in that space already, where there is an ongoing monitoring system, but if there's some kind of incident, then depending on the severity, human beings get called in, right? So as the sophistication increases, entire critical processes start to be done in a algorithm first type of way. Sometimes there may be humans in the loop, but then sort of human beings eventually just get called in for exceptions, right? So once again, this sort of goes back to the way sort of we operate as organisms, right? Like we don't have to think about breathing because it's something we do, automatically because it's in our lower brain function, right? But sort of if you're thrown in a pool, for example, and suddenly you're unable to breathe, your higher brain has to like figure out how to get out of that situation. So anyway.
Right. And I think it's a great analogy. And I think that businesses in all kinds of different verticals and industries have a lot of opportunity to automate some of the more mundane, rudimentary tasks and processes like you explained, but to have the human in the loop at the right level. Now, they're not overseeing and executing so many of these processes anymore when you have that sort of digital transformation, but they are in the loop, and that frees up their time otherwise to focus on other more high priority issues. And so I think that's always kind of a net positive for a business. And of course, it looks a little different depending on their exact model and, the industry that they're in. But I think that's a great analogy and a great way to look at it is you're trying to automate some of those things that are the equivalent of just a natural reflex or something that we would all just naturally do without thinking. But the business needs to do those things without sort of thinking, having the human kind of jump in when there's exceptional cases or times where they have to think more dynamically. So
right.
It makes perfect sense. And Vishy, you kind of bring up the human aspect of data there in that last response. And there's, of course, the human aspect to becoming data-driven as a company. At the same Wharton conference that I mentioned earlier with Sajjad, Mark Ute, a managing partner of Clarion Capital, discussed whether private equity would ever fully embrace data analytics. And he and some other panel members identified resistance to change as the main roadblock, saying that it was 100% about culture and about humans. So with this in mind, how can private equity leaders go about creating buy-in from company stakeholders when it comes to embarking and continuing the journey on becoming data-driven, especially when those leaders may not inherently see the value of taking a more data-driven posture?
Yeah, I mean, this is really kind of where the rubber hits the road, right? And so, we see kind of three aspects of every company or three components of an organization becoming more data-driven, right? It's sort of ultimately driven by the systems you have in place. So this is all technology and infrastructure. There's processes, so how you actually use them, right, on an ongoing basis. So it's not just sufficient to have a CRM. You also need to have things like sales stand-ups and kind of specific processes and kind of performance management at the kind of rank and file level to incentivize people to use, these systems, right? So systems, processes, and then certainly the people, and there is a not insignificant amount of leadership that needs to be exercised here to really, motivate the people to kind of ultimately kind of change the behavior over the long term and kind of make it a lot more data driven, right? So, I think there's in terms of kind of talking to senior stakeholders about is there kind of more value in the data than they initially thought, et cetera, right? I think a lot of people have some intuitive understanding of this information hierarchy concept, right? I mean, there's kind of data, which is just basic, basic signals, right? And then you sort of extract kind of that feeds into information. where, you're not just looking at, what was the sales number for this quarter. You're sort of deriving information from it about sort of how does this, how does this compare to previous quarters? How is it serially, year on year, et cetera, et cetera. And then sort of there's that information, data to information feeds into knowledge. And that sort of gives you a broader kind of context about where the organization is and what that information really means, right? And then there's wisdom, right? which basically is about sort of like, does it matter, right? Like, because it is possible to go on a whole, project where you're outfitting an entire organization, and let's be real here. It is a little bit like, operationally speaking, it's an open heart surgery type of effort, right, for a lot of organizations, because it involves kind of setting in, ultimately it involves behavior change, which is difficult. So people do have an intuitive understanding of that hierarchy, and I think convincing stakeholders about and painting that kind of picture of what would happen if the organization became a lot more data driven, not just financially but also operationally is a great place to start, right? So it's about enabling the right processes, so things like putting in place sales stand-ups, or thinking about kind of customer retention in a much more rigorous way, right? And not just kind of reactively, but when a customer churns, but sort of anticipating some of these leading indicators, right? So setting up the right kinds of processes and infrastructure is very important. There have to be the right incentives in place as well. It's very much a human effort here, right? Like it's not just the numbers don't lie, but we also need to transform how people work. And make sure that sort of people are paying attention to those numbers, et cetera, et cetera. So setting the right incentives to encourage these kinds of right behaviors. And then I think one great thing that leaders can do is really, just publicly modeling this behavior of making data-driven decisions, right? So, I mean, it can be, you can go through the whole effort of, instrumenting a whole business, but if the decisions are still made in a kind of ad hoc, shoot from the hip kind of way, people can sort of take their signals from that, right? And so, it's very important to sort of be very committed to it in a kind of a public way and kind of do that. But I mean, in terms of practical, considerations, definitely, don't boil the ocean, right? Like it's identify kind of very clear indicators of success. Even if it's very limited scope, right? Identify a small process, some kind of, reasonably like medium stakes, not like low stakes, slow enough stakes that it doesn't matter, but like reasonably medium stakes, which maybe not everybody's attention is focused on, but is kind of still important for the long-term growth of the business. So those are the types of functional areas where, you can focus these types of efforts and sort of show wins in terms of kind of ongoing transformation. So, managing the scope, setting the right expectations, setting the kind of right incentives are all kind of part of the story. But, sort of thinking about it at a more practical level, it's important to really identify and, really document these key business processes with a lot of attention to, handoffs between humans and algorithms, right? So, just kind of thinking about what a process is, how do you sort of really re-engineer it, how do you sort of figure out all of the different stages, and then, helping sort of document just having a good view of a specific critical business process is a great place to start. And then sort of, once we have the data and analytics for each sub stage within that process, then we can sort of think about this, other things like, automation or applying machine learning and all of that. So hopefully that clarifies some kind of practical aspects as well as some of the more organizational aspects.
No, I think that's great. And what stuck out to me is really highlighting to leaders up front what the benefits could be, not only financially, like you said, but for them and the organization, for their time, for the ease of making decisions. I mean, there could be so many different benefits there, but kind of aligning on that part of it first and understanding this is not just about leveraging data and that sort of concept in an abstract sense. This is about, real tangible benefits for you and for the business. And then understanding, and like you said, it can be like an open heart surgery. You can't boil the ocean here. You need to pick the right scope to get a win. And then I think that can help to lead to something you pointed out that I really like as well, which is that you start to have leaders start to model data-driven decision making. And I think that can be refreshing for teams sometimes because it ends those conversations around speculating what is going on in the business, what is the problem, what is the data saying. When you have that answer, it kind of ends some of those conversations. You have a ratified version of this is the truth and what's going on in our business. Now the conversation can not be about what is going on, what is exactly the truth, but how do we address that? How do we adapt our strategy and move forward and so on? I think leaders, by and large, enjoy having those conversations instead. And so I think you have to highlight this journey, the steps we can take on it, what the benefits will be for everyone. So
right. But the important thing to note is that, yes, 100% agree. I think that makes, I think those are all, great points, and it's a great summary. The buy-in has to be, through and through, right? Like it can't be sort of within a specific function. There needs to be the right kinds of executive sponsorship, flowing not just from the CEO, but frankly from the board, right? So everybody, has to be bought into this notion. Otherwise it can sort of seem like an exercise which doesn't necessarily, ultimately create value to some. So I think, and really building that picture is one about, it's moving from sort of a transactional leadership style to more of a transformational leadership style. And it's not just about sort of, making sure that, marketing is more data driven or something of that nature. It's kind of really creating that culture within the organization, which encourages people to come up with ideas about what needs to be transformed. What are the types of enabling people to kind of think in a data-driven way, and making it okay and sort of publicly okay to sort of challenge, existing assumptions and so all of that. So it's very much sort of much more of a leadership and organizational culture type of problem, and not just sort of a specific transactional problem. It's much more transformational than that.
Yeah, absolutely agree. So Vishy, what's next on the horizon for you? And for those that are looking to connect, what's the best avenue for doing that?
Yeah, so Weave was founded in late 2019, just before the pandemic, and so we've been pretty busy in terms of kind of getting the firm going and set up off the ground. So we have completed a total of 7 transactions in our portfolio, including 3 platforms. So we are continuing to grow the platform. We've seen some, we're growing the portfolio with new companies. So, if you're somebody who is, ambitious, has, takes a data-driven analytical way to, growing business, you're certainly somebody that we want to speak with. You don't necessarily have to be a business owner. If you're knowledgeable in the industry, and have a business, we would, for us, people matter. First and foremost, data is very important, but ultimately sort of we work with people, and people sort of set the tone, are the types of leaders, and they behave as the type of leaders for a data-driven organization. So, if you're somebody who is a leader within private equity and is looking to grow or transform a business in a data-driven way, we definitely want to speak with you, because we are actively growing our portfolio and looking for new platform opportunities. But, always, happy to talk about, we love the idea of this notion called data capital. It's something that, we talk about a lot within Weave. We think that every business has some interesting kind of signal that is, inherently flowing through its operations. It's all about sort of tapping into that and then kind of using the proprietary insight you have from that to kind of invest into operations and kind of transform them. So, we're always happy to talk about, data problems. We're definitely sort of big data nerds at Weave. And, if you want to just bounce ideas off of us in terms of kind of ways to apply data to your organization, even if there's no deal to be done, that's fine. We enjoy having these conversations. So definitely do get in touch. The best ways, you can, email. My email is just vishy@weavegrowth.com, or you can go to our website, weavegrowth.com, and there's a contact form in there as well. But yeah, we enjoy hearing from different folks in various industries. I think the difference in kind of our approach is that we have a few kind of common industries in which we focus, but our investment focus is very much it's data driven, so it's very kind of cross-cutting. It's very I wouldn't call ourselves industry agnostic necessarily, but our approach has applicability across a bunch of different industries. So we take a thesis-driven approach to investing, and so we are looking across kind of business services businesses. We're looking within healthcare as well as within financial services and insurance. Certain consumer businesses are also interesting. We have a consumer business in our portfolio right now. So anyway, long way of saying is we love to meet folks who are thinking like us, and we definitely want to meet people and businesses where we can build something great together. And so feel free to, we would welcome the opportunity to speak with folks who are thinking this way.
That's great. Thank you, Vishy. We appreciate your time here and being on the show. Thank you for that. And we'll be sure to kind of link the site and your contact information here in the show notes. So thanks again, Vishy. Appreciate you being on the show with us today.
Thank you, Greg. It was a really fun conversation. Thank you for having me.